Welcome back to BestProp4U. Today we're here again, covering, of course, this time around the USD JPY, given that is trading below or at actually 164 and pushing beyond the previous 40-year high, which was near 162.85. So the pair is trading at its highest level in roughly 4 decades, and this is because the yen is under serious pressure. The dollar index is moving above 101, while the interest rate gap between the US and Japan remains, the main macro story. The BOJ, of course, lifted its policy rate to 1 in June, the highest since 1995, but that has not been enough to offset the much higher US yield environment or the carry trade demand for the dollar. But the immediate catalyst right now is a surge in oil prices, it seems to be, and of course a failed intervention attempt by BOJ officials. And we do have the renewed Middle East conflict, of course, high oil prices, inflation risk in the US, the push markets to price a more hawkish Federal Reserve. Also, the tech earnings that we saw this week so far haven't really been that good, which means a lot of investors might be switching to the safety of the dollar. But also additionally for Japan, which is a major energy importer, higher crude prices is a direct economic headwind. So that combination is what supports actually the dollar, pressures the yen, and keeps USD JPY at 164, which on the weekly chart, by the way, it's also reaching overbought territory. So the question is, with price now decisively broken above 162 and the previous 40-year high, and testing now 164, where is potential peak? We are moving into overbought RSI, as I said, and however, prices have also reached on the weekly the upper Bollinger Band. Okay, normally that would increase the chance of a pause or a pullback, but so far the upper band is not really creating meaningful resistance, which tells us that momentum still remains strong. The next level we need to watch, based on our Fibonacci tool, and given, of course, the previous impulse move to the upside, which was up to 160 or so, with a pullback down to 152. It's about 164.26, 164.50. This is the 61.8 Fibonacci extension. Okay, that makes this a very important resistance level. Now, going a little bit down on the daily chart to see what is happening here. The first evidence of potential pullback is the daily RSI. Huge divergence. And we are heading towards 164.20, 164.50. But the Bollinger Bands are expanding, okay, and are expanding at following a slightly tightening of the band. The point here is as long as I'm above 62, but also this peak above 162.90, this still remains a bullish situation. Let's see the same Fibonacci protocol with the 5-wave leg to the upside to 160.50 and then pull back. What does it show us? It shows us the 100 Fibonacci extension at 163.70, which we are currently actually testing. Okay, and this is important because this creates a zone of where potential resistance could form. Okay, the Bollinger Bands are expanding. They confirm there is some sort of volatility is increasing. That doesn't though necessarily means that volatility is going to be upward. Okay, still, our warning here on the RSI and on the daily is something that we definitely need to pay attention to, and the most logical area for a potential pullback to find potential buyers once again would be the 162 rather than the 162.88, because it's a short-term support, potential support. Now on the 4 hour, of course, we're going to go just to the 4 hour, no lower than that. There's no point. What we're going to see, this is a third 4 hour candle that we are expanding above, actually, I would say above, this is the last 8 hours, above the average Bollinger Band, but also is the consecutive candles of in the green, right? Now, from that structure, and again, using the same approach, the peak and the trough, the 100 gives us 163.50. So we have so much support and so much resistance over this territory between 163.50 and 164.20, I would say, that this is a very interesting zone for us to take into consideration trading. The most important insight over here is that the RSI is highly overbought, over 80, over 82. So the first scenario, however, is still bullish continuation. If we do remain above 163.50, okay, buyers remain in control. And a sustained break above 164, which we currently see resistance at, would open the door to 164.10 and then 20, perhaps even 164.50. And the second scenario would be a corrective pullback. If we fail at 164 and fail to also hold 163.50, which might be an end of day trade opportunity, by the way, in few hours ahead from now. Now, the first intraday support would be at around the 163.25, which is another swing resistance, likely turning support. Okay, and a deeper pullback that might take us to 162.80, 89, which is of course in confluence with the medium Bollinger Band on the 4-hour, might be the level where we would want to assess whether the broader uptrends resumes. So the key message is simple: USD JPY remains strongly bullish, driven by the, of course, widening policy divergence, the higher oil prices, and renewed Fed hike expectations, as well as Japan's vulnerability to energy input costs. But at 164, the market is stretched. The resistance zone between 163.50 and 164.50 is where we need to see whether momentum can survive or whether the daily divergence finally triggers a correction. Again, above 163.50, bullish buyers remain tasked with 164.20, 164.50 in focus. Below 163.50, we watch 162.85.90 and then 162 handle for potential support. So trade safe and keep an eye on oil, US inflation expectations, and any intervention headlines coming from Tokyo.